Sprott have just financed this company to the tune of $90 million, and we find out why. We spoke earlier today to Darin Labrenz. He's the CEO of Pure Gold Mining, and he talks to us about the Sprott financing and the conditions around that, plus their recent equity raise of $47.5 million and their listing on the LSE and what that's done for them. We also discussed the production decisions that they're making to get into production by 2020. If you want to look at those topics or more, look in the description below, click on the relevant timestamp, and that'll take you to that part of the video. Plus, if you could click the button in the corner of the screen to subscribe to our YouTube channel, that'd be greatly appreciated. Or if you want to be kept up to date with videos like this, click the notification bell as well. So let's find out what Darin had to say. Hi Darin, how are you, sir?
I'm doing very well. How are you?
Not bad, not bad. So we spoke at the end of April. A lot of things have happened since then. A lot of good things have happened since then. So why don't we kick off? Just give people new to this story 1 minute summary of what you're about, and then we'll kind of get into some of these exciting developments.
Yeah, so we're Pure Gold Mining. Our flagship asset is the Madsen Red Lake mine located in Northwest Ontario. In February of this year, we completed a feasibility study that outlines a 800 ton per day underground mine with 1 million ounces in reserves at 9 grams per ton, which makes it today the highest grade development project in Canada. Recently, we announced a $90 million US debt financing project finance package, which puts us in a position today where we're fully funded for construction and anticipate first gold pour by the end of 2020.
Great. Okay. Good summary. Well, let's kick off with one of those things you just mentioned. I think it's the big news of the day. Is the Sprott debt financing. Can you tell us a little bit about how that breaks down? In fact, how did it come about? Because I know you listed on the LSE when you were talking about listing on the LSE. You were going to talk to both markets about raising some capital. Sprott have come along and just giving you everything you want, haven't they?
Yeah. So we listed in London in May, and looking to satisfy the equity component of our project financing with ideally with a raise that was going to be supported by both the UK audience and the North American audience. In the end, Sprott did come along with a bought deal proposal, and the lead investor in that was Eric Sprott himself. So Eric took down $20 million of the $47.5 million that we raised, putting him as a 10.2% shareholder of the company. We were able to draw in some UK participation. It wasn't as much as we obviously had hoped for, but certainly did see some support from the UK as well. And our listing in UK is still part of a broader plan to increase liquidity and exposure for the company. So $47.5 million raised in equity, and then we follow that up with a $90 million US financing package, which is broken down to $65 million facility, debt facility, and a $25 million US callable gold stream.
Right, and so let's break that. That's a lot of moving parts there. Okay, so you're fully funded now, right? Is that correct?
We are.
Right. Okay.
Yeah, we're absolutely funded. In fact, when you look at our initial capital requirement for the mine, it's $71 million US. Yeah. We've raised $90 million in our facility plus the $47.5 million equity raise, and so the fantastic thing is we're sitting in a position right now where we are we're set to pour first gold in the end of next year, but we're still continuing to drill and continue to pursue a growth strategy for the company, and the financing that we've done has enabled us to be able to pursue that as well.
So why take it down in this order? Why $47.5 million equity? Why not less? It's less dilutive. Is that because you didn't know at the time, or you weren't engaged with Sprott at the time with regards to this debt facility?
Yeah, so I mean, we were well down a path with respect to a project finance facility, but at the end of the day, we didn't really know what the final outcome would be in terms of the quantum that we would raise, the breakdown of how it would be raised, and so the $47.5 million Canadian gives us the most flexibility moving forward. One of the things we wanted to be able to do and will be able to with this is, as I mentioned, to pursue a fairly aggressive growth strategy. And so we do continue to drill on the property, and we'll do so through the balance of the year, looking to increase resources in areas, our new discoveries, Wedge, Fork, Rust, and South, that weren't incorporated in the feasibility plan, looking to ultimately incorporate them. The other thing is, with this financing, is it gives us, a lot of flexibility moving forward with respect to the project build. No need for a cost overrun facility, given that we have, a fair bit of room in there with respect to the equity and debt components of the project finance package.
Right. So, but hang on. So if I look at the share chart, okay, it kind of makes for kind of sober reading. As I said, when we spoke last time, you guys have got some great numbers in there, but kind of the market didn't really care. And you are up from I think when we spoke at 55, you're up at 62, 63 today. But it's not a lot of movement. Obviously, you've had a bit of dilution recently. But do you think that this has just been about timing in terms of the equity raise, the way the market was going? Obviously, in the last 2 months, gold has moved considerably. We'll see where it goes. I mean, if this had happened 3 months later, it clearly would have been better for you. Or how do you assess what's gone on in the last 3 months around the financing?
Yeah, well, I mean, clearly we can't really predict what direction the markets are going to go. We were happy to receive a proposal from Sprott that included the equity investment by Eric Sprott. I see this as another sign of validation. When you look at the company, we have 4 marquee cornerstone investors. You've got AngloGold Ashanti, which participated in the equity financing, maintaining their pro rata position, so they're a 14% shareholder. We've got Eric Sprott now at 10%. You've got Rob McEwen at 5%, and you've got Newmont Goldcorp in there. So strong validation from 2 senior producers and 2 mining titans, if you will. I can say, when you look at Eric Sprott and you look at Rob McEwen, they didn't buy Pure Gold to come in for the mine that we're planning to build. They bought with the anticipation that it could be much larger, and that's certainly our view. You look at some of the opportunities that those 2 gentlemen have been an integral part of. Goldcorp, Rob McEwen, founder of Goldcorp. That company was launched really by the discovery of the high-grade zone deeper down in the Red Lake mine. And similarly, when you look at Kirkland Lake, which has been highly successful, led by Eric Sprott, the Fosterville mine has really rekindled itself with deeper down high-grade discoveries. We think that same potential exists at Madsen, and the financing that we raised allows us to pursue a plan to demonstrate that.
Right, but coming at it from the perspective of a retail high net worth family office investor, okay, we're looking at what the shares have been doing. You've been busy. You've got great grades. You've got a great project. It's cheap in terms of the CapEx component to this, but the market just hasn't reacted in the way that you'd hope. I think we discussed that before. With Eric Sprott kind of coming in now and Sprott themselves coming into this, do you think that's good for the institutional players here, or do you think there's room for retail to actually do well as well here? I mean, when's this thing going to pop? When are people going to take notice? When's the share price going to move, and why?
Yeah, well, I mean, we clearly think that we're undervalued. I have no doubt that there is a bit of an overhang with respect to project finance. And when you look at that typical, mining investment curve, often companies will stall as they go into a period of project finance, into a construction period, and ultimately start to generate cash flow where you tend to re-rate. We think they're really unique in this scenario in that, our project build is very short. And so we made a decision to construct last week, and we've got a 13-month project build and anticipate pouring gold by the second half of next year. And really, we see this as the best of both worlds, because not only are we moving towards cash flow positive, but we have sufficient financing and funds in the treasury today to continue to drill, right, to continue to generate that growth interest.
Okay, well, let's talk about the feasibility study, because if I look in chat rooms and forums, people are nervous about the plan, and can you tell them why they shouldn't be, in terms of the dewatering, access, rehabilitation, around those sorts of things? Why should they not be nervous about the plan that you guys have laid out here? And because if I look back at a lot of gold companies, their prices have popped. Gold's at over $1,500. Yours has moved a little bit, but not a lot. Do you think there's this nervousness in the market about your plan?
Yeah, so let's talk a little bit about that. Let's talk about the resource first, and resource risk. When you look at our project, we've got more than 1 million meters of drilling that has has gone into defining the resource. In fact, the average spacing between drill holes within the feasibility reserve is 6.5 meters, which is absolutely incredible. I mean, I've never worked on a project with that kind of density of drilling. So from that standpoint, the resource itself is very well informed. This is a brand new mine that we're building. All of the development is new. And so when you look at the initial capital requirement, 95 million Canadian, we've got about $31 million Canadian going into pre-production underground development. That's putting in new openings to access the ore body. With respect to dewatering, well, that's a natural phenomena that every underground mine has to go through, and I don't see any particular risk associated with that. At the end of the day, we've got very high grade reserve, 9 grams per ton, 1 million ounces in what I would call the starter mine, if you will, and a huge opportunity here for additional resource and reserve development as we push forward.
Right, but what is the plan? What are you doing? This is a very big area you're dealing with here. This isn't one small asset, where everything is because you've done a lot of drilling. This is you've got a plan for a development of a whole entire area. So what are you focusing on?
Yeah, so this is, it is a big area, but we're talking about a mine that's going to last for 12 years. In the base case, we've got new discoveries near surface at Wedge Fork and Rusty South that we think have the potential to impact the mine as we move forward, and we continue to drill in those areas. Ultimately, we're looking at establishing, and all of the access required to develop the mine. And so we'll start with the existing ramp, which goes down 150 meters, and we're going to push that ramp downwards. We'll eventually start moving into access development for the first stoping areas that'll form the first part of our mine plan. And then in year 3, we're going to incorporate the shaft. And so what you ultimately see here is men and materials accessing the mine via a brand new ramp system. And then all of the ore will be hoisted out of the shaft, which gives you a real operational benefit. So this is, it's a reasonable sized area, but it's an area that's going to be developed over the course of 12 years. And we think has potential to go for much longer than that.
Right. So the plan will evolve over time as the more data you gather as well, I guess. But you feel for right now you're fully funded. You've got enough margin in there for error, as we would say, to make sure that this thing gets into production towards the end of next year. You're good.
No, that's right. And let's not forget that this, our project has a history. It operated successfully for 36 years, generated 2.6 million ounces of gold over that period at a grade of 10 grams per ton. So we have the benefit of a successful mining history. And we also conducted a test mining program last year where we also achieved plus 10 grams per ton in test mining. Within the 2 areas that we had planned to mine, reconciliation was fantastic. We were within 1% on our expected tons. We overachieved our grade, and at the end of the day, we realized 13% more ounces out of those 2 areas. But one of the things that test mining showed us is that, with drilling out of the hanging wall and footwall, we were able to see better continuity in a lower grade portion of the model. And ultimately, we were able to extract another 1,575 tons out of the area at a grade of 8.7 grams per ton, such that, we actually achieved better than 50% more ounces than we expected in that area with that additional discovery. So, those all go along with de-risking the existing infrastructure that we have in place, the 1 million meters of drilling, very close density of drilling. It's all brand new development, fresh rock. This is a new ore body that sits well away from any historical mining. And then we've mined it ourselves and achieved what we expected to see.
And so remind me again some of the numbers. The IRR, I remember, was sort of plus 30, it's 35, 36 sort of level. What was the AISC on this?
It's $787 US per ounce.
Right. So again, a great AISC on this. So all the figures that one would typically look at on this project are good. You've just been in this rather boring period waiting for project finance to come through. But you think people should start paying attention now because you're moving to production, and it's quick production too. Let's not forget there's a very small capex required for this, right?
Yeah, no, exactly. And our project obviously is very, very highly levered to gold. All of our costs are in Canadian dollars. One of the things that quietly happened last week is we saw when gold hit $1,500 per ounce in Canadian dollar terms across 2,000, which is an all-time record high in Canadian dollars. So when you look at our IRR and after-tax NPV of the project at our base case, which was $1,275 per ounce, our NPV is $250 million. Today it's $400 million. And so you can see the impact of the rising gold price. And we think that we've got a project here that we're perfectly timed to deliver into the market.
Well, you and a lot of other gold companies at the moment feel that way. We need gold to sustain, right? Okay, that's really interesting. Can we just finish off on, thank you for the summary, first of all. Can we just finish off on the entry into the LSE? Obviously, you did that for a purpose, to kind of get out there and start talking to have new investors see this story, because the Canadian market was slightly frozen. How's that gone for you?
Yeah, so we're really excited about our secondary listing on the main market of the London Stock Exchange. We've got a bit of work ahead of us to continue to broaden the exposure, generate interest, and generate liquidity. Happy to say, we were chatting earlier, we've traded 500,000 shares on the London market today, which is a new milestone for us, and we're committed to it, and we'll continue to try and develop exposure for pure gold in our project.
So that's great about what's going on with the LSE. I mean, how's trading overall?
Yeah, I mean, we've been trading a lot of volume here over the last couple of weeks. In fact, we've traded about 25 million shares. So, I think we've had a bit of an overhang with respect to the financing, but I think we're setting a new floor here, and we're really ready to break out. So
you got two lots of marketing needing to go, and you got marketing in Canada, marketing in London, and you're committed to that.
Mm-hmm. No, absolutely.
So retail is important to you.
All of our shareholders are important to us. Retail is a key component of our shareholder base, and will continue to be so in the future.
Thanks very much for today. Really enjoyed that conversation. Thanks for the update.
No, thank you very much. Appreciate the opportunity to talk about our project, and appreciate the line of questioning. You've taken a lot of care to go in depth and ask questions about our project that might not otherwise be brought to light. And so I appreciate the opportunity to respond. Thank you.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.